I now invite Mr. Kaide, Executive Director of the Africa Blockchain Institute, to deliver the welcome address. Thank you.
Thank you. Good everyone. Can you all hear me? Can you hear me?
Yes, sir.
Yes, we can hear you.
Awesome, awesome. Thanks again. Good afternoon, everyone. Good day, everyone, wherever you are joining us on today's discussion. And on behalf of the Center, the Africa Center of Excellence in Blockchain Research, we're so much happy to welcome you all to this very much important and timely webinar on stablecoin and financial assets in Africa, which was in collaboration with Utila and also different ecosystem partners as well. Today's discussion could be really more relevant, could not be more relevant, especially as we navigate rapidly digitizing financial landscape in Africa. Stablecoins are emerging as a critical infrastructure for cross-border payment, financial inclusion, and also digital commerce. At the Research Center, the mandate is to ensure that the emerging technologies like this are not just understood, but responsibly adopted to solve real African challenges. Today, we are honored to be joined by some of the most insightful voices in the space, stablecoins, Web3, and also blockchain at large. And you'll be hearing from these experts on the institutional grade digital asset infrastructure, the reality of crypto policy, both also in Africa in comparison what's going on in EU, and also pivot roles of oracles and cross-chain interoperability in enabling trust and efficiency. On this meeting today, Utila will be showcasing how their secure and also robust infrastructure is empowering several enterprises across 30 plus countries, including some African countries as well, to scale stablecoin operations. Serah today will be telling us more on how oracles act as bridges for transparent financial data. So again, I mean, this event is very timely and a good opportunity for us to discuss and talk about the opportunities around to reduce remittance costs, enhance transparency, drive economic participation, and also ultimately deliver on the promise of equitable digital finance. Today, I really want to welcome us again and make sure that we learn together from these experts on their presentation and also some of the questions that we'll be asking at the end of the day. We hope it's going to be very conversational and going to be very insightful for many of the information that I'll be getting from today's webinar. And share boldly your ideas as well, both as an expert and also as a stakeholder in the space, so that we can able to imagine a future where every Africans like me and you, and also globally as well, can really have access to secure and efficient financial tool that actually work across the borders, across different African countries, and also across different platforms. Thank you once again for joining us today's webinar, and let's get started. I'll hand over to Isioma to please introduce the next speaker. Thank you, everyone. So if you can hear me, I think hand over to the next speaker, which is Ron Hasgall, the business development at Utila. Ron, if you could hear me, please over to you to please share us more about Utila.
Yeah, hi, Tommy and the Africa Blockchain Institute, and all of you. Very excited to be here. I'm calling you from Israel, so it's not far, so far from Africa, but still happy to connect with all around the world in crypto and everything. I'm leading the business development at Utila. I will give a little bit background about ourselves and the platform and how we see Africa as exciting. So let me just like share my slide. So amazing. So basically, Utila in a nutshell is a wallet infrastructure. Okay, we provide the secure infra for every institutions and enterprise and fintechs and stablecoin PSP that want to build on stablecoin, the ability to do it in a secure and flexible way. Um, we powering treasury managers or trading operations or anyone that actually building on top of the crypto ecosystem, and we are using specific technologies and security to allow you to do it in a safe way. We're based in Israel. We are 55. Also, a share to how they do it and how they improve their stablecoin operation with us. Most of the people are in Israel, 90% of the people, and also we have sales around the world, in London, in Singapore, in US, and in Latam. We raised more than $50 million to build this kind of platform, and we have more like 250 clients. So after the webinar, feel free to reach me anytime. And any questions that you have regarding infrastructure or compliance to build like a safe and secure startup inside Africa, and how to utilize Utila for distribution. So feel free to reach me out. We also have integrations with Chainalysis. We are powering many volume and transaction are going through our platform to the stablecoin side and to implement stablecoin. Our founders are again from Israeli. They have a cybersecurity background, the cryptographic to secure the private key of the wallet. We raised from fintech companies like Nika, Wing, Red Dot Framework, and everything. And again, to build this trust and to be all around the world to power the next stablecoin startup in emerging markets and also in the developed country. So we actually have a great footprint in the Africa continent. More than 20 African fintechs using us for stablecoins. Any reports showing spends. This is why to do that. So basically, we are powering like Fairmoney as the largest mobile app in Africa, and Yellow Card is one of the largest PSPs to move money from one place in another on the stablecoin side. Also, Easy Transact, Mansa, EasyBeat, AutoSpend, and many other that we very familiar on what they are doing. Next year, we're going to be in 4 cities, in Nairobi, in Lagos, and Cape Town. We'll be happy to invite all of you to our events and to see more on the stablecoin side and the crypto. And as we can see that Nigeria, for example, is the leading company in global crypto adoption. So we understand like this need, and we want to be there and to help what we can do, mostly for startups that need our help to grow. And again, like why is that interesting? Why stablecoins in general are interesting? They have like instant settlements, that this is very important for many kind of trades and forexes. They allow borderless transfers. They are very cheap. They are not using any intermediaries. You don't need a bank in order to use stablecoins. So even if the banking infrastructure are slow, you can use stablecoins only with internet. you can do workflows with stablecoins and build on top of that whatever the workflow you need. You can do that also, of course, with Utila. And you also get exposure to currencies that are stable, like USD or Euro, and to keep your money in a store of value, let's call it like that, in a means of USD. So in that reason, we see many African traditional fintechs and traditional banks coming into stablecoins. So every one of you maybe know M-Pesa, Flutterwave, OnAfric, Nala, and EcoBank and Absa Bank in South Africa. So all of them are in stablecoins, right? Like all of them implemented a way to interact with stablecoins and to allow the customers to use stablecoins. And this is very exciting to see it because the demand is coming from Africa and from Latam and is going to all over the world. So Africa is a main hub for stablecoin operations. And again, all around the crypto cycle and the trading cycle and the payment cycle using stable coins, if it's PSPs and banks, stablecoin issuers, treasury teams, OTC desk, all of them are a client. But again, they have like a very struggle because stablecoin is very complex. So we allow them to use our platform with our tools, with our infrastructure, with our ability to open wallets fast in order to and multi-chain in order to do it more simple and more easy. And we see many PSPs that was very tilted to fiat as now starting to use stablecoin because we simplified this kind of process and we connect them to liquidity provider and we connect them to the best chains and infrastructure and AML tools and everything that they need to build this stack in a compliant, secure way. And this is what Utila is doing. Very simple. You can create multi-chain wallets, you can set up the automation, connect to the AML provider, and start working. And of course, we have many other features to allow you to be more, to generate yield, to open, to use a gas station on the blockchain, to allow you bring your own compliance vendor, to use DeFi if you know a couple of things, to use on and off ramp solutions to move the stablecoins to fiat, and et cetera, et cetera, et cetera. And our latest addition is very interesting for the Africa continent. This is very important, talking all around the world with providers. Many of them want to have exposure and have connections to the Africa continent and fintechs. Can help a US fintech or EMEA or a London fintech to do on and off ramp inside Africa, as they have the banking partner there. And now we have like a yellow card, like I said, Quidax, AutoSpend, Valor, that they all job is to get stable coins like USDC to Tanzanian shilling and everything to allow Africa continent to and merchants here to have businesses all around the world and to accept euro and then to use the fiat. So this is what we stable coins into one platform in a secure way. So I apologize if it was too fast. I would love to understand if there is some questions or everything that you want to understand more about the platform or Utila or the stablecoin side. Amazing. So thank you all. And again, I hope that you understand the values of the stablecoin and how to do it securely. And basically, this is what we want to do. And we believe that in Africa, there is a potential to the stablecoins have a potential to change and to add the inclusion. And I think like the next lecture will also emphasize this ability of stablecoins and how they can change, but what is the risks that they have to in order to do that. And we hope that Utila can mitigate the risks of operational risk and security risk and market risk on the fiat side. So feel free to reach out, and hope that we will see you, all of you, again in person in one of our events in Africa. Thank you, Tommy, and
Amazing.
ABI
Thank
for
you, Ron.
hosting us.
That's amazing. Of course, as a ground rule for everyone, can please drop in your questions as we continue on today's conversation, so that we'll be able to share some ideas as well. Thank you very much, Ron, for this presentation, and we'll continue in this conversation as well. Isoma, if you're back on the call, please over to you as we continue on today's webinar. Thank you again, everyone.
All right, thank you, Mr. Kaidi. Thank you, Ron. Next, we have Serah. Serah is a product manager and a founder building practical digital tools for everyday use across Africa. She founded Rembo, a mobile-first platform that helps beauty and wellness businesses manage their bookings and operation. Previously, she worked on crypto wallets and peer-to-peer payment platform at Nextcoin, and on payment system and digital services at Vodafone Ghana. Our master research looked at how stablecoins actually work in sub-Saharan Africa, particularly how reliable local data affects whether people trust and use them. Through surveys with practitioners across the region, she explored how infrastructure challenges and unclear regulation shape adoption, and why Africa stakeholders are calling for both better technical safeguards and stronger user protection to make these tools generally acceptable. Ladies and gentlemen, Serah.
Thank you, everybody. Thank you. I'll just share my screen. And yeah, thank you everyone for joining us today, and thank you for Utila for setting the stage. So I'll just share. Just give me a second. So if you can confirm, you can see my screen. 1 second.
Yes, we can.
Yep. Okay, fantastic. Actually, I'll just turn off my camera because of internet. Okay, great. So I'd like to start with one simple question today. Can stablecoins really deliver financial inclusion in Africa if the data underneath them is broken? And that's the question I've spent the past year trying to investigate. And before I go any further, I should say I'm going to simplify some technical concepts today. So to the engineers and the developers in the room, I ask for your forgiveness in advance. My goal with this presentation is to make it as accessible as possible while still staying accurate about what's happening on the ground. Yeah. So as we all know, we are living through a moment where stablecoins are being presented as a solution to some of Africa's most persistent financial challenges. And as we saw earlier from Utila, the promise is compelling and the use is real. But beneath the promise is a dependency that a lot of people don't see, and many don't talk about, which is blockchain oracles that we'll be addressing today. And oracles are the system that feed real world information into blockchains. So things like exchange rates, reserve data, and identity checks. My research suggests that this infrastructure layer faces a lot of capacity constraints across Africa. So today I'll walk you through what I learned from practitioners across Africa and why it matters for inclusion. So about this research. So my research draws on a survey I did for the past year on 95 blockchain practitioners working across sub-Saharan Africa. So these are developers, founders, product managers, researchers, policymakers, people that are actually building stablecoin systems on the ground. The survey covered 15 countries, with the highest representation coming from Nigeria, Kenya, South Africa, and Ghana, as Ron was also showing earlier. But these are also the continent's blockchain hubs, so the concentration also makes sense. I did this research between January and September, mainly between January and September of this year as part of my master's thesis. And the research goal was very straightforward. I wanted to see how do blockchain oracles shape whether stablecoins actually deliver financial inclusion in Africa, or if they end up becoming another inclusion barrier. So let's start a bit with the context before we dive into what I found out. So 45% of adults in sub-Saharan Africa still lack access to formal financial services. That's nearly half the African population without either a bank account, access to credit, or even basic insurance. Also, the region received 56 billion in remittances last year. And for some countries, like Lesotho, for example, remittances actually account for nearly a third um, of its GDP. So that's actual money, not that money is not just economic activity in the abstract, right? It's school fees, rent, medication, food. But the problem is across Africa, a lot of people end up losing a lot of a big percentage of their transfers to fees. It can be up to 10% or even more. So that's money that should be going to families and to small businesses. So here the challenge we have with financial inclusion is not just people are being excluded. It's that even when money is moving, a big part of it is leaking because of friction. And the barriers are all familiar, all things we are familiar with. We have high fees, limited bank access, especially in rural areas, lack of formal IDs, and in many places, most places, I would say, there's a low trust in institutions, so banks, governments, after decades of economic and political instability. So this is a landscape stablecoins are entering. So they're promising to bypass a lot of these barriers and to offer faster, cheaper, and more accessible financial services. And in many ways, one could say they're actually delivering on that promise. But the question is, can they sustain it? And most importantly, can they scale it without creating new forms of exclusion? So what are people actually using stablecoins for today in Africa? When I asked practitioners, so the people working on the ground on blockchain and crypto use cases, what they encounter on the ground, the use cases were actually overwhelmingly practical, right? 97% said they frequently encounter stablecoin use for remittances. That's not surprising because stablecoins offer low costs on traditional corridors, faster settlement compared to traditional routes. 96% said that they also see it being used for cross-border trade. That's businesses using stablecoins to pay suppliers, to avoid currency hurdles, and basically to move money across borders more efficiently and faster and cheaper. And 95 also said that they see it being used as an inflation hedge. This means that people are using it as a way to protect savings because a lot of local currencies are depreciating. And as you can see from these use cases, these are not trading or speculation stories. These are every day, 43% every use case we see here depends on something underneath, which takes us to oracles. So a bit of technicality, but it won't last long. So oracles. So as we all know, maybe not, a blockchain is deliberately isolated. So it can't directly access external information. and that's intentional. It's how blockchains maintain security and decentralization, right? But everyday blockchain use cases need external data to function. Think, for example, if you want to look at stablecoins in Africa, they need to know what's today's exchange rate between the USDT and Naira. Are the reserves actually there? Has the user passed compliance check? The blockchain or smart contract, to be more specific, can't answer these questions on its own. And that's where oracles come in. They act as a bridge, right? So the blockchain would request data, for example, on somebody's ID to see if they're on a sanction list. The oracles would fetch it from the real world, an API, a bank, a compliance database, and then transmit it back to the blockchain in a way that it can understand and in a programmable manner. However, the tension comes because oracles end up reintroducing trust into a system that's designed to minimize it. You end up depending on external parties for accurate and timely data. And what makes this tricky is that if the oracle sends wrong or delayed data, the blockchain doesn't necessarily stop it. And this is what researchers call the oracle problem. And in Africa, these challenges are not theoretical. So for oracles for stablecoins in Africa, there are three oracle functions that, without accurate price feeds, users lose value at exchange rates. But users are actually transacting at parallel rates. Someone sending a remittance or some money back home could lose a lot of money just in that conversion. And that's before platform fees, right? Because you're getting numbers and exchange rates from various sources, and you might not necessarily know who to trust or which one is the real one or correct one, right? A second one is reserve checks. So is there actually $1 backing every token when talk about USDT or USDC? This is without getting into how stablecoins or fiat-backed stablecoins work. This is essential for trust, right? Unlike traditional bank deposits, stablecoins don't have deposit insurance, at least not yet. That means if something goes down, your bank, you're not insured to get all of your money back, or any of your money back. And this risk isn't just under collateralization, it's also reserve concentration. So if reserves sit on one bank or one type of asset and that fails, users end up getting exposed. And we've seen this in the past. I don't know if any of you remember, a few years ago, Circle's USDC briefly lost its peg for a few days and fell to about 80 cents when Silicon Valley Bank collapsed. And that's because Circle held 3.3 billion of its reserves at that bank. In the end, the US government stepped in and everybody was made whole, but it did reveal a critical vulnerability. But so reserve checks are meant to make sure that you can see for every stablecoin that they actually hold the reserves and what the concentration is for that reserve, right? So you might say if you see 3.3 billion at one bank, you might be like, maybe I won't go with that stablecoin, I'll go to another one, right? But the information that provides that is what is called an oracle. The last thing we have is compliance checks. So this looks at if a user is verified or flagged or sanctions. These ones are important for meeting regulation requirements, but it also has real inclusion implications, as we'll see in a bit. So now to the heart of the matter. What are practitioners in Africa on the ground actually experiencing when it comes to oracles? So according to my survey, 75%. Yes?
Yeah.
Hello?
Yeah, they're going to be there
Sorry.
for some days. They'll be
Please
there for some
continue.
days, that's 2 to 3 days.
Okay. So now the heart of the matter. On my survey, I asked what practitioners were actually experiencing on the ground when it came to oracles. 75% reported overdependence on one single oracle source. That means no redundancy, no backup. That means, for example, they're getting all of their compliance from just one place. In practice, this often means relying on a dominant Oracle provider like Chainlink. And whilst Chainlink is technically sophisticated and established in the space, if that one source experiences delays, everything downstream, everything that is connected to that, is affected. 74% also said that they experienced data discrepancies across sources. So, which means different sources told different truths, even though they were looking at the same thing. So what does this look like? I'll give you an example. Let's say you're a small business in Lagos trying to pay somebody or a supplier in Nairobi using USDC. One oracle tells you the conversion rate is X, another one tells you it's Y, and the real market rate might be Z. So users lose money in that gap, often without realizing it's happening. And practitioners say that this is something they encounter. So different data from across sources. 65% also reported delayed data updates, which is what it says. And then when they asked them when it came to Oracle specifically, what was the biggest challenge that they face? 46% said it was limited local data, which means that simply aren't enough Oracle data providers that blockchain systems can reliably pull from or access in a programmable way. And perhaps the most telling part and the most telling finding was the fact that 85% of them said that in Africa, Oracle infrastructure is inadequate for supporting widespread stablecoin adoption. As you can see, this is not a minority view. That's an overwhelming consensus from the people actually building these systems. This is their day-to-day. So what happens when oracles fail and who pays the price? Obviously, as you mentioned earlier, we have price data failures. So like with the Naira examples, Oracle was reporting official exchange rates, but market rates are different. Users will end up losing value while trying to do that conversion. We also have single points of failure. So if a system depends on one Oracle and it goes down, the entire system can stop. Price feeds, freeze, reserve checks can't verify. Compliance checks can't go on. So no transactions, no payments, and no access to your money pretty much. And for people using stablecoins as their primary financial account, this is not just a small inconvenience, right? This can feel and can be a crisis. Last but not least, we also have compliance exclusion. Oracles check, as you know, for formal ID, but a lot of people, millions of people in Africa, don't have formal documentation. So women, informal workers, refugees. Also, in many African countries, government databases are fragmented or incomplete, and it's very difficult to integrate with them reliably. So when one of these systems end up defaulting to exclusion, if a verification fails, you end up actually locking out the very people financial inclusion is supposed to serve, right? Because for a lot of people who are using stablecoins as primary financial access, this ends up becoming a barrier. And also, here's the thing, the people most likely to be excluded are already excluded from traditional banking. So again, as you said, instead of solving financial exclusion, we risk through different means. So pretty much replicating traditional banking, but just now with a new technology. So now here's where things took a turn and that the story took a turn in my research. You might expect with all of the risks and the challenges I'm talking about, the more risks people saw, the less supportive they became. But that's not actually what I found. In fact, 89% of the people that I surveyed remained optimistic about the future of stablecoins in Africa, despite the risks and the challenges. It's something I called constructive confidence in my thesis, and it shows up in two ways. We have the optimist and the pragmatist. The optimist says we need to get this right so stablecoins can deliver on their promise. So they're really optimistic and they want to make sure that they work well because there's so much potential. And then we have the pragmatist who sees the benefits but wants to support them if risks are addressed. So both end up being supportive despite seeing the risks, but their support is not blind, right? It's conditional, it's demanding. So this pretty much tells me that risk awareness doesn't necessarily lead to rejection of a technology. It can also demand for better solutions. And that's exactly what I saw. In terms of what people on the ground actually want, so I also asked them at the end after we had seen the risks, what was needed to make stablecoins and oracles work for inclusion? What did they need to see? Everybody, as you can see from the numbers here, they were very consistent. The first thing we saw was inclusive design, right? That means local agents for cash in and cash out, clear, low and transparent fees, simple verification processes that don't require formal ID, interfaces designed for users with low literacy. And to them, these were not nice to have. These are essential features if you actually want stablecoins to reach the people who are currently excluded. And again, that's who we're talking about, right? We're not talking about necessarily the middle class in Africa. Next was regulation. So 81% rated this as essential. They want consumer protection. They want consumer protection for users. They want fraud safeguards. They want innovation sandboxes so that new ideas can be tested safely. And especially for Oracle providers, they want standards for them so that there's accountability when things go wrong. So here again, we're now talking about heavy-handed restrictive regulations. They were talking about smart regulation that protects users without crushing innovation. Last but not least, localized technology is also something they mentioned. They rated as essential. So this means local data partnerships with either telcos or the big fintechs that we have. They actually have a lot of data already. So how can you partner with them to bring that data to the forefront and to have that data feed oracles and the stablecoin system that we are building? They also want multiple oracles, not a single source, low bandwidth systems that work in places with poor connectivity, especially. And one thing I also want to highlight from my analysis is that when I measured the relationship between support, I found a strong. This pretty much means that those who strongly supported inclusive design also tended to support strong regulation. They didn't see them as trade-offs, which is something actually asking for regulation, and they also want inclusive design. They go hand in hand. they saw them as two sides. Before I summarize and I do my final takeaways, I'd like to kind of pose 3 questions that, in my opinion, that matter. And yeah, for builders is, if regulation is slow or absent, are users still protected by your regulators, policymakers? Are you able to protect everyday users without crashing innovation? And for me, in my opinion, this is a balance that Africa needs. Regulation that creates accountability while at the same time leaving room for experimentation and growth. And for everyone, for all of us, always ask ourselves who benefits from this technology and who gets left behind. I think these questions will define whether stablecoins become a tool for inclusion or just another system that excludes the people who need it most. So yeah, to kind of summarize the research, these are my 3 key takeaways. Firstly, the Oracle problem looks very different in Africa, right? Usually you hear about sophisticated attacks, trade-offs of decentralization. It's really not about that in Africa, at least not right now. It's about infrastructure, data that's not reliable, and also a lack of local capacity. They just aren't people with data providers with Africa data. And until we address that, stablecoins won't scale safely or inclusively. Secondly, and that's what my thesis showed. So everybody was aware of all of the risk, or they were brought to aware. And then those same people who were most aware of the risk were the ones pushing hardest for various safeguards. And that's constructive confidence in action. And another nuance to add here is that the respondents in my survey weren't just passive users decided whether or not to adapt stablecoins or not. They are active stakeholders, developers, entrepreneurs, people with agency to actually make the change. They actually built in it. So the fact that they see risks, they have the power as well to do something, was making improvements. And that's exactly what we need, and that's the type of mindset that we need. Lastly, inclusion requires deliberate design. Technology alone cannot solve exclusion. It won't happen by accident. We need so many things. And one responded captured perfectly. We can't just rely on global data providers. We need reliable local data sources that reflect what's actually happening on the ground. And yeah, if there's one message I'd leave you with, it's stablecoins can support financial inclusion in Africa, but only if we take the invisible layers very seriously. Thank you.
Thank you, Serah and Ron, for making this session insightful. I would like to ask, and from our audience, if anyone have a question to put forward, then it will be read. So first question, as we can see from Africa Blockchain Institute, how can stablecoin developers ensure Oracle diversity and resilience, especially in markets where local data sources are scarce or reliable? This question goes to Serah.
Yeah, okay. Hi, thank you for your question. I think partnering with people who currently have a lot of data. Telcos do have a lot of data. It might not be structured well in a way that can be programmed, but that's a place to start. There's data there, right? Which personally I don't think is taken advantage of. I used to work at Vodafone Ghana in the digital transformation department, so I know how much data there is and literally how much we want necessarily sharing with others. So that's a good place to start. And also fintechs, the Flutterwaves, the Paysacks, they also have various data sources. That's where I would start. And also governments as well. Governments have a lot of data. There's a lot of governments now that are digitizing. So it's literally about creating partnerships with them and trying to organize that data and structure that data so that it can be used in other use cases as well.
Oh, great. So integrated question to what you just said, what roadmap will you posit to solving data risks and ensuring inclusive data ownership?
I'm not sure I understand the question when you say roadmap. In what sense? Maybe clarify that.
Okay, yes, a way that you will follow to posit a solving data risk, ensuring that inclusive data.
That is that is a big question. I think I would start with getting everybody, all of the stakeholders, all of the relevant stakeholders, the people with the data involved in one table, and then from there find a roadmap, a way that works. Governments especially would have to play a big role because it also has to do with how data is being collected in the first place, right? So I think this is where regulation comes in. A government can go to a telco or to a hospital, to schools, and start establishing data standards, making sure nobody's get left behind. And then from there, it starts. So obviously this won't happen overnight. It's a long process, but we need to get our data in order, start collecting it properly, and go from there.
Thank you for this answer. Well, there is another question. I hope Ron is with us because it is directly to him.
Yeah, I'm here.
Ron, okay, go. How does Utila's stablecoin infrastructure specifically address the major roadblocks such as compliance, reconciliation, and developer constraints that other platforms struggle with?
Amazing. Great question. So basically, regarding compliance, we partner with the largest compliance AML monitoring in the industry, Chainalysis, TRM, and Elliptic, to allow you to screen every outgoing and incoming transaction and to freeze the funds if they are coming from, let's say, sanctioned list addresses or from terrorist organizations, and allow you to separate and segregate the frozen funds from your clients' funds. And this is how you can stay compliant. Chainalysis are well known and established with all the largest entities in the world. So basically, it's a very good solution. Regarding developers, we build our platform as an API first. That means that all of our workflows are built on using like a very easy API that all of the developers that can read API docs can use, or like support that can help, and solution engineer that can help to set it up. Also, in other challenges, again, I think security is the largest challenge in crypto. We saw in the last years many hacks that happened. Our platform has like the best security approach with the MPC on the private key. And the policy governance that allow you to someone from your organization will steal the funds. So I think this is a great question because when we build the platform, we asked the questions for many institutions, and we build the platform to be adapted to these kind of challenges.
Oh, that's great. So prior to asking more from the audience, there is someone who raised a question, Edison Basson regarding whether he will receive slides and webinar. Yeah, this is to give you confirmation that you will get the webinar link. That is, the recording will be shared with you later. So another question from Timi Pabeni, which is direct question to Serah. Are oracles really the main bottleneck, or are regulations and adoption bigger issues?
I don't see it. I don't see them as the only bottleneck, but they're a critical one that cuts across design, regulation, and adoption. So if price data is wrong, regulation doesn't end up protecting users, right? If identity data is exclusionary, if it doesn't exclude everybody, adoption stalls, right? It goes slow. So what my respondents were saying is that even well-designed products and good regulation can fail if the data and underneath is weak. So oracles are not the only story to stablecoins in Africa, but they are a foundational one. They are an important one.
Oh, fantastic. Thank you for this response. So another question to Ron, what role does Utila envision for stablecoins in solving real-time treasury and payment challenges for fintechs and traditional financial institutions in Africa?
Yeah, amazing. So basically, these challenges are dynamic and they're changing all the time, and we want to be flexible on what solution we provide. So basically, I think one of the largest challenges, again, besides security and compliance and developers that we already talked about, is also liquidity and is also connectivity for other kind of currencies and entities around the world. So this is why we build the network of our clients of your Utila link that allow every traditional financial institution or fintech in Africa the ability to connect with any other institutions, licensed and regulated institution around the world, and to do business with them, and to allow everyone from North America, LATAM, APAC, Europe, and everyone to connect with the local and to do business with them and to share liquidity and to have partnership around banking partners. So like I said, we just today utilized euro and to go inside Africa and to avoid the inflations that I have in Africa and to expose only to euro and to do business with but also from the business and distribution. And I talked with many US fintechs in the last weeks and months. They understand that stablecoins as USDC allow them to have the getaway to Africa continent without risks of local currencies. Tricky. Receive, and this is how I think they do that. Another thing that we simplified is the cross-chain. And you need to understand that fintech some of the time doesn't understand what is a blockchain and how many blockchain there are, and there are like thousands of blockchain. So we basically allow you to be agnostic to that and to connect to any blockchain that you want and any currency that you want and move money. So you don't have challenges to open a wallet, to bridge, to swap, to understand how to connect to a different kind of blockchain. We support Stellar, we support Aptos, Sui, all AVM, and other kind of names. So I think this is the way we want to do that.
Thank you, Ron, for this informative response. I would like to call on my colleague to take it from here. Mr. Tommy, are you with us?
Oh, yes, I'm here. Yeah. Good evening, everyone. Uh, first of all, I would like to, thank our speakers, or even to ABI, the team for, bringing this conversation. It's something that is quite critical at this point in time, looking at how stablecoins are defining how we move money, and then blockchain being an emerging technology. There's still a lot to talk about. We're still scratching the surface, to be honest, right? There's still a lot of development that is coming, that would come through. So in terms of the risk, in terms of the responsibility for proper innovation, it is a conversation that would continue to have. So I would like to thank Ron from Utila and Serah for bringing this insightful conversation. It's to be honest, it's been quite a engaging and insightful session for everyone. I've gained quite a lot looking at the risk and some of the challenges that needs to be addressed. And again, I believe that there are also a bit of areas that we were not able to mention to talk about, which is in terms of the policy engagement. And because this is something that is critical into ensuring that we have responsible innovation across the continent, right? And again, I would like to thank all the participants. Thank you for taking out